So you've been trading for quite a while now, and you've probably had some success, and it really seems like forever ago that you cracked open your first trading chart. You've learned about the markets, what works and what doesn't, and can carry on an intelligent conversation on most trading matters. You talk a pretty good game, and you are extremely proud of how far you've come and the success that you've had on the road to trading profitability. You can even tell where the market is going to go much of the time, and you know what to expect when it does something different. But the big problem for you is that you still can't cross that bridge between market understanding and actually making money trading on a consistent basis. You may have even had some periods of healthy profitability where your equity curve was on a strong up move, but for some reason those periods are far from being consistent. So what's the issue? Is there something wrong with you, or you're just not very good at trading? Really, perhaps it's time you just threw the towel in once and for all and just give up on your dream. Now, I'm not saying that that's not something you might need to consider at some point in the future, but at this point, there's still quite a bit you can do in order to turn the corner once and for all. And one thing you never want to do is to stop just 3 feet from your goal before you have exhausted all avenues to get yourself on the right track. When temporary defeat rears its head, most people just pack in their efforts and move on to something else. If you've read the book Think and Grow Rich, you're probably familiar with the story of the man who struck gold and continued to mine it until he hit a dry spot. Thinking the riches had run its course, he sold off the machinery and he just moved out of town. Well, the person he sold the equipment to had different plans. Being objective at what he was facing prompted him to seek advice, and after the ground was examined, it turned out that the other person stopped drilling just 3 feet from his goal. And that is not what you want to do. Now, there are times when you just need the right words at the right time to propel you off to great success. Perhaps you'll find those words in this list that's coming here that'll help take your trading career to another level. Number 1, make the commitment to trade professionally. This means to do all that it takes. It means doing those things which you probably already know you should be doing to make things work. This is a professional business, so you really have to raise your game. Number 2, working with your current life. Now, there are really 2 parts to this. The first is you need to trade a product and a trading way which fits your schedule. If your day job means you don't have enough time to trade a particular product, or you're just too tired, look to something different, which will be a better fit. If your family distracts you, you must find a way to change this. And also, you must be as emotionally balanced as possible, not just for trading your plan properly, but also that you're in the right place to do everything properly. Number 3, being able to mentally focus on the task at hand. Now, moving on from the last point about the family distracting you, you must be able to focus on your work fully. Don't create things to do. The internet and emails can be a big problem. It's maybe a good idea to shut everything down other than what you need to trade or work for a time period which you've set aside in your plan. Make sure you're also realistic in your trading plan about how long you can focus for effectively. Make sure you've eaten, but not too much. A rumbling stomach is not good in my experience for focusing at all. Number 4, take stock and make a plan. You may well know a great deal about the markets, and there may also be knowledge gaps. Identify what you know and what you don't know. Then look at the kinds of strategies that you might feel work for you. Just don't keep banging your head against a brick wall either. If a product, a time frame, or a strategy is not a good fit for you and your account capital, look at something different. Figure out all the things which you look at and then decide what's truly important to use. There is nothing worse than being bogged down by irrelevant information. Also, follow your own experience. There's nothing wrong with integrating what you've seen others do in the past, but unless you take ownership of what you're doing, you're less likely to deeply understand what you're trying to achieve. Structure your plan as clearly and as simply as you possibly can. You must know what you should be doing as a trader most of the time. There should be little to no ambiguity in your trading plan. Number 5, test your trading strategy thoroughly. You need to do some kind of testing in order to understand how or if it works and gain confidence in the strategy you're going to be using and putting valuable capital on the line for. Back test, forward test, statistically analyze and work out how to trade the strategy and if your plan needs to be adjusted at all. Doing this can give you the confidence in your strategy and the courage to take the next trade when you encounter a losing streak. Number 6, organization and routine. To minimize error and build confidence in your own ability to trade a strategy, It's imperative that you're well organized and you have a routine that you're comfortable with. Not only will you benefit from being fully prepared to trade, but also it'll be much clearer when things are not quite as they should be. It really allows you to find that rhythm. Number 7, analyzing trader and strategy performance. You've got to know what to expect from yourself and your strategy. If you don't, you'll not see when there's something wrong, and most importantly, you won't know how to fix it. If you don't keep statistics about trades you took for certain strategies, you won't be able to analyze past performance. You must also have a sensible way of adjusting your plan if there's a flaw in it, which you identified. Number 8, trader psychology. It is really important to break bad habits, which have become ingrained over the course of either your trading career so far or possibly your whole life. Recognizing issues may not be something which is immediately possible, but if you're consistent in your approach and you keep track of what you're doing, problems become clear fairly quickly. Now, leading on from this, it's important that you understand the consequences of these issues and that you're in some way accountable so that you might remain resolved to avoid future slips. Building up consistency in terms of your approach and ultimately your performance will help to create new good habits over time and go some way towards eliminating the bad ones. Now, the fact of the matter is that a lot can be talked about in regards to these points. But what I hope is that if you're truly committed to becoming a professional trader and making the turn, this can act as an outline which you yourself can flesh out with all the details and the rules that are important to your approach. Committing yourself in this way may not be the easiest of roads to take, but it's most likely to be the surest. So ask yourself how much longer you're willing to stand by with the prospect of trading for a living being just out of reach. Take that first step today, right now, towards making that turn.
Area where price broke through and rallied hard away from the moving average. Number 2, price starts to trade above the moving average, as well as the slope of the indicator is up, and our plan says the trend is up. Number 3, price returns to the area marked number 1. It's also a complex AB equals CD retrace. Number 4, the momentum indicator crosses, turns up, and we buy stop the high of the candle that turned it. A simple selection